Karachi, the Pakistan Stock Exchange, PSX, endured a tumultuous trading week as a combination of encouraging and discouraging news led to market fluctuation between red and green zones. Consequently, the market closed at 41,052 points, down by 1,089 points, or 2.58%, during the week ended June 24. The market commenced the rollover on a negative note due to uncertainty regarding the International Monetary Fund (IMF) program. However, the sentiment turned positive when the Chinese consortium of banks signed a $2.3 billion loan facility agreement, and the Economic Coordination Committee, ECC, approved the second installment of 96 million rupees to the Independent Power Producers (IPP) of the 2002 Power Policy. Related items. Fact check: no, SBP has not finalized design for 75 rupee note. Explainer: what is super tax? Industries to close, inflation storm ahead, PTI, industry players chide government for imposing 10% super tax. Furthermore, Finance Minister Miftah Ismail announced that an IMF deal is imminent, which also helped boost investor sentiment. However, during the last trading session, the on 13 major sectors as well as a 4% additional levy on banks, which caused the end hit an intraday low of 40,555 points. In other news, the State Bank of Pakistan, SBP, to $8.24 billion, which put further pressure on the Pakistani rupee, which dipped to and against the US dollar during the week. However, the announcement of the helped the rupee recover some lost ground. Other major developments during the week were: Oil and Gas Development Company discovered reserves in Sindh, Punjab, steel bar prices raised to 236,000 rupees a ton, non-textile exports soared to $11.2 billion, and the Federal Board of Revenue abolished a 2% additional duty on the import of edible palm. Meanwhile, foreign selling this week clocked in at $2.39 million against the net sell of $1.91 million recorded last week. Selling was witnessed in all other sectors, $3.5 million, and banks, $1.9 million. On the domestic front, major buying was reported by individual, $7 million, followed by other organizations, $3.4 million. During the week under review, average volumes clocked in at 301 million shares, up by 73% week on week, while average value traded settled at $44 million, up by 72% week on week. Major gainers and losers of the week. Sector-wise positive contributions came from exploration and production, plus 116 points, cement, plus 90 points, oil marketing companies, plus 80 points, power generation, plus 56 points, and engineering, plus 51 points. On the flip side, negative contributions came from commercial banks, minus 263 points, chemical, minus 34 points, and technology, minus 33 points. Script-wise major gainers were Hubco, plus 51 points, Pakistan State Oil, plus 50 points, Pakistan Oilfields, plus 36 points, Pakistan Petroleum Limited, plus 32 points, and Oil and Gas Development Company, plus 31 points. Meanwhile, major losers were UBL, minus 75 points, Mizan Bank, minus 71 points, Bank Al Habib, minus 46 points, MCB, minus 44 points, and Standard Chartered Bank, minus 34 points. Outlook for next week. A report from AHL believe that clarity that will emerge next week on certain economic policies would aid sentiments at the bourse. It seems Pakistan has met all requirements to enter into the IMF program to receive the $1 billion tranche, it said, adding that once the package comes through, other sources of foreign exchange reserves should also open up, which should relieve some pressure on our dwindling foreign exchange reserves. The brokerage house noted that the Chinese loan worth $2.3 billion has already been rolled over, and hence, we expect the market to be positive in the coming week. The KSE-100 is currently trading at a PER of 4.1x, 2022, compared to the Asia-Pacific regional average of 11.8x, while offering a dividend yield of 9.6% versus 2.7% offered by the region, the brokerage house stated.